So using the best gap trading strategy that I've created, I was able to buy the SPY yesterday at the exact low of day, right before it had a massive reversal. As you can see right here, I alerted that trade to my team in real time that I bought SPY calls at 10:11 a.m., which is right before it had this massive reversal in the exact lows. And I did that live on stream. Now, what if I told you I used the same strategy today to short the SPY and buy put options at the exact top at 9:57 a.m. right before it crashes? And what if I told you I prepared my team for this trade before it happened in the pre-market like I always do? As you can see right here in the pre-market, I said the SPY is gapping down. The chart is setting up bearish. The best entry for puts is when the gap fills at 406.48. I ended up live streaming that trade live, and I made a 30% return just like I did yesterday, buying calls at the low, but this time shorting the top and buying puts at the lows. You can use this strategy both ways. Imagine having a strategy where you can short the exact top and bet against the stock right before it crashes using put options, and then buying the exact bottom right before it spikes and explodes with call options. If you want to learn how to do it on the long side, watch the playlist, watch the previous videos. That teaches the long side. This video is going to teach you the short side. It's going to teach you how I was able to top tick the SPY and how I was able to prepare for this before it actually happened. And once I exited this trade for a 30% win, I had people asking me, well, Will, what if it goes back to the gap? Are you going to play puts again? I literally told them it already worked. You must anticipate the plan before it actually happens. You must do it when people aren't expecting it to crash. Once it's already resistance, it's already too late. And I told them any trades I make from here are not the best setups at the best prices, and it's just going to be lotto trades. So I continue to trade and I continue to make lotto trades. I'm going to be recapping what I did right and the mistakes I made as well. I continue to trade towards FOMC. I had two 30% wins in a row. I was on a 3 green streak. Then I made 2 more trades against the trend and had 2 losers. With that being said, I'm going to show you how to trade the best setups at the best prices, and that is all you need to do. All I want you to do is focus on this one simple gap trading strategy that is going to get you in at the exact bottom right before that short squeeze gets created, right before that massive spike hits. And I also want you to use it on the short side. Right before it has a massive crash, you're going to be buying puts at the lows when the stock is at the top. So how do you do this, man? Like I said, watch the playlist, the second link in the description. It's going to go more advanced. Towards the end of this video, I'm going to be showing you my new updated price action analysis on the SPY. With that being said, man, this was all alerted 100% in real time. This is where I alert my best setups at the best prices. I ended up making 5 trades today, 3 wins in a row, and then 2 losses in a row. I only alerted 1 in terms of Will alerts. These are the best setups at the best prices. This is the gap trading strategy. My lotto trades, I alert in the SPY floor. I live stream best trades at the best prices in terms of live streams. That's what I tend to focus on. I want to give a big shout out to the members within Trader Society. In terms of Dimitri, this is one of the best traders here. I saw massive improvements in his trading today, and I gave him some respect in the morning because he ended up shorting the SPY, and he got out of his short position at the open because it gapped down, and then he rebought puts once the gap filled, and then he banked on that. Then he continued to trade, and I started disliking some of the trades that he was making. But all the power to, man. He's absolutely killing it. He ended up making over $30,000 on the day. This was just one of his trades, a $13,000 profit very, very quickly on that. And we got members, man. Hun Solo, 40% today. Jim C, up over 19K. Like, we got members killing it, man. So with that being said, let's get into the strategy. So what I'm going to do is I'm going to show you how do you top tick the SPY. How do you short the SPY right before it crashes? What you're going to want to do is, and you can use this on stocks, you're going to want to find a stock that's towards the high of the channel. It could be a 5-day channel. It could be a daily channel. You want to find a stock that's trading at a resistance level towards a top of a channel that has big downside potential. So let me give you an example. Right here, the SPY has a lot of resistance at this $407 resistance with big downside potential, right? It's not the exact top of the channel, but it has a lot of resistance on the daily towards that level. So if you see the SPY gap down, Will, what is a gap down? A gap down is when a stock opens up lower than it previously closes. This white line, I don't draw this on my charts. This is all automated. I had to pay to get an engineer to create this, right? This is all automated. This is the best price you could be possibly trading at. Look at this, man. SPY hits the white line. It has a reversal. Calls explode. It's unreal. SPY hits the white line right here. It has a reversal and it explodes. Bought calls twice on those opportunities. SPY hits the white line today, has a reversal, gets absolutely crushed. If you are not trading with the previous closing price, you are trading trading blind, my friend. The foundation of my strategy is to analyze if the previous closing price is reacting as a floor, support, or reacting as a resistance, as a roof. If it reacts bullish in a support level and it's breaking above, then it's bullish. If it reacts bearish and it forms a resistance level, then it's bearish, right? With that being said, as you could see, the SPY ended up gapping down, which is bearish. So if it instantly rockets back up to fill the gap at the previous closing price and it forms resistance, well, what's a confirmation you use for resistance? Well, right here, it touches the gap. This is a very bearish doji, and it starts to pull back. And then Dimitri ended up buying puts into this little pullback. I waited one more minute and I bought puts at a better price into the green candle, because that's what I do. I wait for it to look bearish, and then when it spikes back up, I buy the puts to get a better entry than someone who buys the puts into the bearish candle. With that being said, I said on stream, if the SPY forms lower highs right here, there's a small little 1 minute gap right here. If it forms lower highs, it's going to get absolutely demolished. It's going to get crushed. Right here, it was reacting bearish. I added to puts. I bought the puts right here at 9:57 a.m., alerted to my team real time, live on the voice channel, live on stream. And then I added right here at 9:59 a.m. because it was pulling back, forming lower highs, turning this previous low on these 1 minute candles into now resistance, bearish crash, resistance, bearish crash. Then shortly after that, SPY got demolished and the puts went up 30%, right? With that being said, that's what you want to focus on. You want to focus on stocks that are gapping down towards the top of a resistance channel. It could be a 5-day channel, it could be a 20-day channel, it could be a daily channel. You want to find something that's overbought, something that's overextended, something that looks very high in value, that has a proven history of big downside potential. So for example, it's almost at $407. If you go on the daily chart, you can see SPY has a very strong resistance channel right around this $407 zone. So if it gaps down and rips back up to fill the gap, you play the puts. That's the name of the game. Also, more reasons why I like this trade. It's been having partial gap close reversals for 3 days in a row. As you can see, the SPY gap down right here. It partially filled the gap, formed a bearish candlestick. You can use bearish confirmations on multiple timeframes with this strategy. And then it began to have a reversal, and it sold off for the vast majority of the day, right? And that happened at around 10 a.m., where when it gapped down, it rocketed back up to fill the gap, and then at 10 a.m., it started to reverse for the entire day. As you can see, the same thing happened yesterday, except SPY gapped up, but then at 10 a.m., it started to reverse. And then as you can see today, the same exact pattern happened. I hope you guys are capturing these patterns in real time like we are, because this is what we're doing. SPY gap down, started to push back up to fill the gap, and then at 10 a.m., it started to reverse. So we already know it's partially filling the gaps and having reversals, and it's closing gaps and having reversals. We already know a key time for short-term reversals to scalp is around 9:50 to 10 a.m. We already know if a stock gaps down or if a stock gaps up and you are in on a swing trade, you get out as soon as the market opens, and then you wait for it to go back up to close the gap. So that's what we're doing. It's called a gap close reversal, right? And you want to use it when it's overbought and oversold. So what's a good example of an oversold opportunity? Watch the playlist. We went over this yesterday. SPY gaps up, it fills the gap, it's at key support, big upside potential. As you can see, SPY gaps up, it's at previous support, there's a gap to fill right here, big upside potential, and there's a gap to fill above. What makes the strategy better is if it's a two-part strategy. The first part of the strategy is a gap close reversal. That means SPY fills the gap and it starts to have a reversal at that gap, at that line, right? And you never bet against the side of the reversal. The second part of the strategy, when you use this strategy, it's not always going to have this, but if it does have it, it's automatically better. And if you want, you can just trade it when it has this. The second part of the strategy is when there's a gap to fill within the side of the reversal. So if SPY has a gap that's waiting to fill above and it reacts bearish and it's having a reversal, what makes it better if there's a gap to fill below? And there was a gap that was still waiting to fill below at $400.59. If there's a gap to fill within the side of a reversal, of a gap close reversal, then it makes the trade better, right? Same thing right here. SPY ends up having a gap up. It fills the gap. It has a reversal. What makes the trade better? Well, there's a gap to fill above right here. And history shows it can explode and start to hit that price, right? That's what makes the trade better. Those are some of the basics. What you're looking for is that, quick overreaction to fill the gap, and then a short-term reversal to get in at the top, and then you sell into the dips when you're buying puts and into the rips when you're buying calls. You get in, you get out very, very quickly. So that's the basics of the strategy. Now, in terms of some things that I want to mention, in terms of some mistakes that I did end up making today, let's get into the other trades. So take a look at this, man. People were asking me, what do you think about FOMC? So I'm a price action trader. I don't look to trade during the news or anything like that. I try to avoid that, and I wait for someone to get screwed. So what do I mean by that? This is what I mean by that. Look at what I had to say about SPY yesterday. People were asking me about FOMC. This is what I said. For example, so this was yesterday. I posted this yesterday within the chat. In January 31st, I posted this yesterday at 2:47 p.m. Look at what I had to say. If the SPY was trading in between $405 to $406, so that means it's in a small little 1-point channel, before the FOMC, and it crashed massively, I would simply do puts when it spikes back to the previous 405 support. That's where the bulls got trapped right after it crashed, and it's confirmed bearish because it already crashed, so I would just do puts. Guess what I did? I did that exact trade. This is another strategy I have. Not the best setup at the best price. This is a lotto trade. It worked very, very well, and I did it twice. So what do I mean by that? Well, at 2 p.m., a big move is going to happen, and somebody's going to get screwed. The people who flip a coin and just hold through this news, one side is going to get wrecked. So this is what I do. Right here, see how the SPY has this support right before it crashes? What's the support at? The support's at $405. SPY has a massive crash to 402. So now we know that the bag holders were the people who bought calls at $405. It was in a channel, right? It was bottoming at 405 and it was topping at 405.50, right? So that's the channel. So now we know since 405 cracked that it's bearish and it has big downside potential. So what do? Do we buy puts? Do we short the stock when it's crashing like that? No, we wait for it to spike back up to the previous support. Your previous support is at $405. Your previous resistance is at 405.50. When it spikes back to that previous support channel, which triggered the massive crash, that's where we short the SPY and buy the puts. The initial reaction. So on the top of this candle, when this hit 405, I bought puts automatically. When it looked bullish, this didn't close like a bearish wick like this. It looked bullish. I bought puts. Why? Because wait for a stock to have a massive crash due to some sort of news or something. When it instantly spikes back up, not to the top of the channel, but to the previous support. The previous support is at 405. The top is at like 405.50 to 406, right? When it spikes back up to the previous support, which triggered the crash right here. See how it has a massive crash right at this 405? When it instantly spikes back up to that level, you short it automatically. And then boom, the puts went up 30% in 2 minutes. 30% plus return in 2 minutes. It was crazy. I got on the dip. I'm out like that. It's a very quick scalp. You must anticipate that before it actually happens. That's why I literally said this. People were asking me, whoa, what do you think about FOMC? I told them, you wait for it to have a massive move against somebody. So it had a massive move against the bulls. So what you do is when it instantly spikes back up, you're anticipating that the previous support level is going to react as a short-term resistance, a short-term top for a very quick scalp where you can make a 20 to 50% return on same-day expirations. That's another strategy I have. So understand, I'm not buying the puts when it's at resistance. See how like right here, I'm not buying puts when it's at resistance. I already know it's going to be resistance. You see what I'm saying? It's prepared in advance. I already know it's going to be resistance. It already crashed massively from that level, and I do it on the first time. So write that down. You must do it on the first time. You must be able to see the resistance already there before it's actually there. You must strategically plan and say, okay, it already crashed massively. So if it goes back from this level, whether it was a gap down or whether it was just a flash crash due to some sort of news event or something like that, when it instantly spikes back up, that's when I short the stock and buy puts. I don't get trapped and short and buy when it looks bearish. I buy when it looks bullish into this candle, and my level is the previous support in terms of the lotto trades. And in terms of the best setups at the best prices, these are the only trades I recommend for anyone to trade is the previous closing price, the gap close reversal strategy. That's the game. We already anticipated that it was going to be resistance. You can give it a couple minutes and see if it's reacting as a resistance, but I typically just look to get in, man. It's initial reaction. You have to have very strong standards if you're going to do it more than once, but on the initial reaction, it usually works the vast majority of the time, so I'll usually just get in on the initial reaction. Like I said, people were asking me about puts if it goes back to the previous closing price. I told them it hit the best setup at the best price. We just made 30%. Why would you want to do puts again when it's already reacted as a resistance? If it keeps pushing back up, they're going to try to break it out. Why would you want to do it when it already worked out so well? Like if you do it, you're literally risking your profits. That's what you're doing. So just hit it once, hit it the first time, and then just call it, right? And then I did the same thing again. I played puts literally again when this retested again. I played puts right around here when this retested this key level, and then I sold for a nice 30% win. And then in terms of where I went wrong, this is where I ended up going wrong. I did a poor lotto trade, man. I bought puts as soon as it broke above the previous closing price. It started going against me, and then I got out right here very, very quickly for like a 40% L on that. And then I said I'm going to call it, and then I did puts one more time, another 40% L. It is what it is, man. If you're buying puts when SPY breaks above the previous closing price and it's forming a floor and it's forming support, higher support above the previous resistance, higher support above the previous resistance, and it's above the previous closing price, that's super bullish, and there's no reason for puts. And like I told people earlier, man, it already worked. Don't do it again. That's why I called it a lotto trade. So the strategy worked, the best setup at the best price worked. I hit it, and I did very, very well. I continued to trade. I continued to do well. And then towards the end, I gave back some profits, didn't do so well on the last two lotto trades. But like I said, man, if you're trading during power hour and if you're trading FOMC, these are like complete lotto trades towards the end, and they should be very, very small size. There's a reason why these contracts are super cheap. But in terms of what I teach in the best setups at the best prices, it worked very strategically. And I don't want you to keep on hitting it, man. Puts worked here at once. Don't keep doing it if it rips back to the previous closing price. Learn to call it for the day. Take your profits, trade the best setups at the best prices. Like I said, if you see me do a lotto trade, you're going to know it's a lotto trade because the lotto trades that I do are not in will alerts. Will alerts, these are where I alert the best setups at the best prices. I had 5 trades today, 3 wins, 2 losses. In terms of the best setups at the best prices, I only put in 1 because this is where the gap filled. The key levels are aligned with the will alerts. That's the system that I created. If I do a lotto trade, which is basically not the best setup at the best price, and it's a random price action trade, it's a lotto. It could work, it cannot, it's a lotto. The win rate on lottos are like 50 to 60%. The win rate on the gaps, the key levels, this year, in terms of key levels, has been 100%. In terms of my win rate with the gaps this year, it's been 100%. But in terms of key levels, it's usually 80%. This year has been a crazy start. But with that being said, man, I want you guys to focus on trading the best setups at the best prices. Ignore the lotto trades. They're just price action trades. We have members in here who have a big bankroll, and they can afford to gamble to a degree. They can afford to trade price action. They can literally afford to just make certain trades where the win rate doesn't matter. They get out very, very quickly if it goes against them. They can do a lot of things that you can't do, and you must earn the right to do that if you want to do that, but you don't even have to do that. All you have to do is trade the best setups at the best prices. I want you to focus on the gap close reversal strategies. I want you to focus on the gap fill strategies. And I want you to just ignore everything else for the most part. If you see something that is that you agree with somebody in the chat and you see it, then go for it. But don't go taking any massive risk, man. Trade the best setups at the best prices. All you need is this one simple gap trading strategy that I'm consistently teaching you, man. It's absolutely crazy, man. We literally play puts right here towards this partial gap close reversal. We hit it again, and then it just didn't work the third time. So if it breaks above the previous closing price and reacts as a floor, then you got to get out, man. Look at how many times it worked today. It worked right here 1 time. It worked right here 2 times, and then I played at a lower level 3 times. We hit it 3 times. If it's gonna keep on trying to break out and then it finally breaks out and forms a floor above it, then yeah, it's gonna go super bullish and you cannot hold. If you hold these trades for long periods of time, you deserve to lose. You genuinely deserve to lose. This is a scalping strategy. You get in, you get out. You scale out on rips if you're buying calls, and you scale out on dips if you're buying puts. That's what you do. There is no blindly holding. There is no, I'm going to hold this, I'm going to add here. There's none of that, man. You must trade the best setups at the best prices. So I hope that helped, and I hope you learned a lot from that. If you do want to be a part of Trader Society, that's going to be the first link down below in the description. You will get access to the Discord server. You will get access to the key levels, to the watch list, to my real-time trade alerts, to the live streams, to the networking opportunities. We have some great traders in here, man. We have a trader in here. He's consistently making over $20,000 a week. It's crazy. He just had his biggest day again. So big shout out to Dimitri. And like I said, I gave him the respect that he earned in the morning because he ended up swing trading a short position. He got out. He did well. He didn't do puts. Puts got crushed because of theta decay, IV, all that stuff, right? He didn't do options. He ended up shorting shares. And then he got out the open. And then once SPY filled the gap a minute before me, he bought the puts because he knows how the strategy works. And I respect him for doing that, because some of the trades that he's been making lately, I really haven't agreed with him and I don't like what he's doing, but they're very quick. They're like trades you make within less than a minute, and it's working for him and he's getting results. So all the power to him. If you have something that works, you can compound it and you can scale it. That doesn't mean that what you're doing that works cannot be improved or there's something better to be doing. And that's what you have to understand. There could be a much better strategy out there. That's why I focus on the gap close reversal strategy, because you're getting in at the exact top before it crashes and the exact bottom before it spikes. And it's the best trading strategy. You're not going to find anything else better than this, right? So if you want to surround yourself with the networking opportunities, with the community that is, dedicating its time to mastering this one simple trading strategy, where you get the watch list, you get the key levels, you get the networking opportunities, you get the live trading streams, you get the video lesson library with over 100 hours of content that's going to show you how to trade the best setups at the best prices step by step. It's going to teach you psychology, discipline, risk management, position sizing. It's going to show you how to read price action and how to master the charts. If you're looking to master the charts and make 2023 your best trading year, click that first link in the description and just sign up, man. It's a one-time fee. It's lifetime access. You get instant access. You can start trading with us tomorrow. I would also encourage you as well to watch that playlist down below. That's the second link in the description. In terms of what I have to say about SPY right now, we're just going to have to wait, man. I made bets with people in Trader Society. We had 2 people in the chat who thought we were going to get new lows on the SPY before it hits 420. I told them, look, man, the chart's bullish. There's gaps to fill above at $420. A lot of bullish blue chip stocks and a lot of penny stocks have been rallying. People are saying 2023 is going to be a much better year for investors, which makes sense because 2021, 2022, these weren't great years for investors. It makes sense for things to turn around a little bit for the micro. I told him, look, SPY's already breaking out. Look at the chart. Does this look overall bearish to you? Resistance is here. It breaks out. It pulls back. It bombs at previous resistance. Now support. That's bullish. It breaks out again. This is your previous resistance. It bombs at previous resistance. It breaks out. This is your previous resistance. It breaks out. It bombs at previous resistance. It keeps turning previous resistance levels into support levels. That's why you saw me adjust a lot to call options recently on these dips, on these gap close reversals, because the market has been very, very bullish overall, and we have gaps to fill above. We have gaps to fill above on the SPY at $420. There's a gap to fill at 422. There's a gap to fill at 427. All these people who are buying leap option puts, I told them, wait until the 420s. This isn't going to get new lows until we at least start to fill the gaps. There was people who bet against me in the chat saying it was going to get new lows before it hits 420. I'm like, bro, we're so close to 420. It's going to happen. Give it time. They disagreed, and they paid a price for that. They just keep blindly buying puts. They keep blindly swing trading puts. They don't fucking listen. But anyways, with that being said, man, there's nothing bearish about it still, which is why I haven't been swing trading puts. There's just nothing bearish. I don't care about a small little drop, right? So your previous overall resistance is at this $408 level. 408 to 407 is your previous resistance on the daily. That's where they're going to try to spike it back up if it does crash, if it does collapse. In terms of the short term, in terms of the micro, I don't have too much of an opinion on it right now. Once it gaps up or gaps down tomorrow, then I'll have a strong opinion on what it's going to do in the pre-market with my team when I send out the pre-market trading plans. But with that being said, in terms of the SPY, overall, for the macro, it's still bullish, and I see it going to 420s. Do I see that happening right away? Absolutely not, but anything's possible. But we're definitely going to 420s before we get new lows, 100% in my opinion. Now, with that being said, key levels that I'm going to focus on, as always, is the previous closing price. $410.80 is going to be make or break. In terms of other levels that are not the gap trading strategies, I'm going to keep an eye on the 407 and 408 zones. You could write those levels down. $410.80 is the new best price to be trading at. I'm going to see how it reacts. Right now, the SPY is gapping up. That could change. I'm going to see how it reacts. That's the key word, man. Based off of what I'm seeing on the daily, if the SPY does gap up, I could see a pullback. I could see a pullback happening where it starts to fill the gap, and then we'll have to see if it's going to react as a reversal. Is this an attractive level to be buying for a gap close reversal at 410.80? No, not on the daily, but in terms of the strategy, if you were to use this strategy every single day this year, you would have made money. You would have literally made money and you would have gotten the best price. It worked every single time. So I'm just going to keep on using it until it doesn't work. And then once it doesn't work, I'm going to figure out what I did wrong, take a step back, and I'm going to wait for history and charts to develop, right? We're at a very interesting level where it's not the most attractive to be buying calls, but we do know within time it's going to hit 420. So you don't want to get trapped in puts. Basically, if this gaps up, I'm leaning towards puts. That's a complete lotto trade. I'm going to need to see a channel develop in the pre-market. And if it cracks that support level, when it instantly spikes back to the support level that it cracked, then I do the puts, right? So if SPY's gapping up tomorrow, it's trading in the channel and it crashes at the support level, whatever it's going to be. If it spikes back up to previous support, I do some lotto puts. I play for the gap that's waiting to fill below if it gaps up, right? 410.80 is going to be make or break. If that cracks and reacts as a resistance, we go to 408 to 407. They're definitely going to try to spike this at 407 to 408. That's where they're going to try to create the next bear trap, if not at 410.80. Basically, the way I see it right now is we're due for a short-term pullback. And if the SPY gaps up, it's likely going to be a good opportunity for a lotto trade if you do it right, where, like I said, you identify the key channel in the pre-market, it cracks support. When it rips back up to previous support, play the puts, ride it back down to fill the gap below, get out very, very quickly, 410.80. 410.80 is going to be make or break. The trend has been telling us that every single time SPY hits the gap, it's been having a reversal this year. I don't want to bet against that trend, so if it gaps up, and it hits 410.80, I'm not looking to do puts, but it must form some sort of very bullish confirmation for me to be scalping a call that high, right? And that's make or break. If it doesn't work on my level, I get out very, very quickly. If 410.80 cracks, reacts as a resistance, then it's going to try to flip a little bit micro bearish. That's my thoughts. That's my analysis. If you want to join Trader Society, now is the best time to join and change your life for the better for 2023. It's going to be that first link down below in the description.